So hi guys, it's time for Forex. Now you've heard a lot about Forex, but trading Forex, how it gives you financial freedom, how you're supposed to trade hands off and all that. This is not true. But before we go all that, because we give you a chance to try this out so that you can see yourself through MT4 and through my Telegram group there. Yes, you need to understand what the basics of Forex are, what pips are, the measurement of Forex, how much you're going to make if it goes up, how much you're going to make if it goes down. So this is the video to do so, to expand your understanding on how you can make or even lose money in Forex, okay? Because you're not going to win all the time. The most important thing is that our account shows overall a positive result. So see you on the inside. Please note that this show is only for educational purposes. All trades that you see here should be taken first in a demo account and is meant to reduce your learning curve. Having said that, should you want to take real trades, you should consult your financial advisor first. Although I do trade real accounts, I'm not recommending any of these trades for you. It is up to you if you want to follow me and take it in demo accounts. Thank you very much. Welcome again, guys. So today I'm going to do the basics of trading Forex, because I think you need to know this before you even attempt to go in and try with signals. You know what Forex is all about, how it works. Especially I know you've heard about this concept of pips. Just ask anyone in Forex, they'll say 10 pips, 20 pips, I lost like 100 pips or whatever, because this is really the measurement of the percentage move in Forex, and really a measure of how much they make or they lose money. Because now you gotta remember that now in Forex, I just have like to emphasize to you that 95% of all traders lose money, especially retail traders, and probably only 1% of all traders are actually profitable and profitable sustainably. So you must remember that. And throughout this entire series, what I'm trying to do is basically to change your mind, to show you how using robots can actually improve your odds. Don't trade Forex manually. It's hard. I'm not saying that there aren't people who can do it. There aren't good people, but what is going to make you a good person or a good trader? That's another issue altogether. So let's get started now with what Forex really is, so that you can be well on your way. Okay, you can be well on your way to start doing the exercises and the live trading on your demo account, in which we give signals in our Telegram account. So it really all starts with the pip percentage in point. It's really the smallest move in Forex, So a pip is basically equivalent to 1 to 100 of 1% of one basis point. So because most currencies that you see are really into 4 decimal places. For example, if you look at the Euro, USD, I think, well, it doesn't matter what it ended up. I think I ended up at 15001. So this fourth 1, 2, 3, 4 is actually 1 pip. Okay. And if you go, that's 1 pip, like if it's at 15010, that is actually 10 pips. You see, for example, here the smallest moves in USD CAD is 1 pip. So it's to the 4th decimal place. Of course, we have another example for the Japanese yen, which is very different. But let's go on this first. Let's get you cleared on this first before we confuse yourself further on the Japanese yen. So, let's just look at some examples of currency pairs. Let's go look at the charts and some examples of basically the currency pairs, so that you can understand more about really this concept of pips. And, because if you can't understand this, and if you don't move beyond this, you really can't move forward. Okay, this is really the basic of all Forex actually. So it's very important that I think you really need to really understand this fully, okay, before we move forward. So this is a chart here. I like this site, Daily FX, because it does have a lot of news on Forex. You can learn about Forex every day here, dailyfx.com. I have here the chart of the Euro USD. And if you look how the prices are quoted here, it has this 1.05333. So I told you just now 4 decimal points. Please keep it to 4 decimal points, okay? As far as we're concerned, this is the euro is 1.1053. Now this is the extra one, the 5th one. This is a pipette. So this is actually for smaller accounts. Now, so just ignore that. Just go to the 4th decimal point. So you see if this is the current price of the euro now, and let's just measure it in pips, okay, so that you understand all this. So if the price of the euro falls here, say from 1.1049, I'm going to take that out to 1.1040, or it goes like that, 1.1040. We minus this out, and suddenly, what do we have? 0.0013, right? And that is what is called, how many pips is this, guys? This is 13 pips, okay? So, you know, when you talk about people making or losing money in Forex, you then translate these pips into US dollar amount, or whatever amount it is. And you know, when we learned just now the code of the Euro USD here, we learned in an earlier module that this was the base currency and this was the code currency. So, you know, in this sense, the pips actually is measured in terms of US dollar, because the code currency is in US dollars. So let's go to another example here. I'm going to pull out Aussie US dollar. This is the Australian dollar against the US dollar, Aussie, Aussie. So here you see the current price of the Aussie, at least if I see it here. Yeah, that quote there is now at 0.6817. Again, I'm ignoring the 5 here, okay? So if it falls to 0.6800, that's 0.0017. This is what? This is 17 pips. That's how you measure the pips. And how is the pip value measured? Again, Aussie against the US dollar, because this is the code currency. The pips are actually measured in terms of US dollar, and this is what we are going to explore next. So let's do a pip calculation, okay? But let's do it the hard way. Yeah, this is pips hard way. So, you know, we went through the Euro USD. Let's go to the GBP USD, which is the British pound against the US dollar. You see that the pair is now at 128.98, right? Now say it goes to 128.00. So it has moved a total of 98 pips. Just take this 3rd and 4th decimal point. How much is this in dollars now? Now say that you're trading like 10,000 Forex currency pairs. So all you need to do is just, you know, 10,000 times 0.0098. And you basically get here, just move this 4 and you get 98, right? So 98 what? Well, then you got to look at the code. How is this coded? GBP against USD. This is the base, this is the counter currency. Hence, because the code currency is in US dollars here, this is basically $98. So here, at least in this case, you can see that here for 10,000 currency units, 98 pips is $98. Hence, 1 pip is equal to $1. Okay? And then you can get here like, well, what if we have like 50,000? You know, what if we have 50,000 currency units? Then 1 pip will be $5. Hence, you are going to make a total of 98 times 5, which is like, yeah, that's around like what? 540? 540? Yeah, that's around like, wait, 8 times 5 here is 49. Yeah, that's about 490, right? That's about $490. Just times that by 5, because for 50,000 currency units, 1 pip is $5. And how do you know that? Well, this is how we validate it. Let's clear up this thing here. So I'm going to clear this drawing again. Again, it moves 98 pips. So it moves like that, 00098. And you have 50,000 currency units. And if you time that by 50,000, let me calculate it on my calculator. Here, so that I get numbers right, 00098 times 50,000. That's about 490, right? So that's 490, 490 US dollars. Again, remember this USD. So this is in USD. Hence, since this is 98 pips, here at least 1 pip is 5 US dollars. So that's really how you would calculate it in this case. So this is the hard way. I don't expect you to calculate it every time. So why don't we just use a shortcut and calculate it in a different way? So here's the easy way to do it. You know, if it's simple, you know, if you see a pair like GBP USD, Aussie USD, Euro USD, whatever, as long as the basically the quote currencies in USD, 100,000 units, you know, it's actually one standard lot. Or, you know, sometimes in brokers, you have to define the 100,000 units if you want to trade. For example, I use Saxo Bank. But if you are in Metatrader, you basically put 1 or 1.00. That's a standard lot. 10,000 units is 0.1, or this is a mini lot. You put that in Saxo, you put this in Metatrader. 1,000 is 0.001 or a micro lot. And here, basically, if you have this, actually is a mini lot here. Basically, for 10,000 units, 1 pip is 1 US dollar, okay? Of course, here, 1 pip for 100,000 units or a standard lot is actually 10 US dollars. And here, 1 pip is 10 cents, okay? That means per every pip movement. That means if you get a 100 pip move here, you make $1,000. You get a 100 pip move here, you make $100. Get a 100 pip move here, 100 pip move here, you make $10. That's how it goes. Just times that number by the number of pips you make or you lose. So, you know, if you're trading one lot, one standard lot, again, if it moves by 85 pips, then basically you've made 850 US dollars. And yeah, that's 10, yeah, that's 1.00 size, right? The size that you enter on MT4, or you're trading other platforms that require you to define the number of currency units. That's basically 100,000 units. That's the easy way to do it. Now, what if you have a case where, this is interesting, right? The counter currency or the quote currency is not the US dollar, it's the AUD or NZD, NZ or GBP. For example, you have a pair called Euro AUD. Now, what if it moves like this? What if you have, let's say, for example, that you're trading like 10,000 currency units. You know from our previous slide that this is $1 per pip, okay? So per pip, this is $1. This is, of course, 0.1. Find it, this lot size in MT4. So here, if it's Euro, you know, if it's Aussie USD, of course, then 1 pip is $1. But what if it is Euro AUD? How much is a pip? Well, then it's not going to be a dollar because now the pip has to be represented in Aussie, okay, in like Aussie dollars. So 1 pip is like 1 Aussie dollar. It's not US $1, right? So here, 1 pip is about US what? It's now like 68 cents, right? So it's smaller, okay? So, or just 70, just to make it easy to calculate. So if a currency pair moves 100 pips here, and you're trading like 10,000 of it, here, you know, if it moves plus 100 pips and you buy the currency pair, because in Forex, you can buy and you can sell the currency pair also, both sides. That means you long or you short. Here you make 100 US dollars for 100 pip move. But here for a 100 pip move, guess what? You're not going to make 100 US dollars. You're going to make like 68 US dollars. So, you know, just to get the same amount, you will have the currency pair for Euro AUD will actually have to move much more, and you know, of course, it's more volatile than Aussie USD. This is just what crosses do. Similarly, if you have another currency pair here, I'm going to throw another one here, which is like GBP NZD, then the pip measurement is actually in NZD. So if you have 100 pip move, this means it doesn't move like $100 for 10,000 currency unit. It moves like around like what, 64? Yeah, about $64, because one pip is not $1. One pip is actually 64 cents. So when you have this, you know that, you know, these have to move far more for you to get the same number of pips. And that's okay, because they are more volatile. Now, what if another case you get something like Euro GBP? Now it becomes different. You see here that the currency, okay, the quote currency is in GBP, so the pip is actually in GBP. Now you have a different kind of problem here. So let's say it moves like 100 pips. Let's see this, and let's say that the currency pair moves 100 pips. Okay, so does it move 100 pips? Here, you know, say for 10,000 currency unit, you get $1 per pip. Does it move $100? No, it moves more than that. So for 100 pips, if it's GBP, it moves like 100 times what is the exchange rate between GBP and USD. So since the exchange rate between GBP and USD is 1.29, that means it moves by $129. So you see this, if you're trading GBP, you might want to reduce the number of currency units, because you're going to get much more. Okay? It's going to be more volatile. If you make, you make more, but if you lose more. So you got to control yourself. You might want to reduce the number of currency units if you are trading a currency where basically the quote currency is basically in GBP, okay? And that's how you do it. And now we go to the next issue. The slides tend to go forward because yeah, it's quite confusing. One pip, if I'm trading a yen, isn't, you know, I just say it's about approximately $1. I know it's not, okay? Because for this case, I know that one pip, you basically have to divide that $1 it's slightly less than $1, so it's basically 100 divided by 109.22. You know, that's about like what, 84 cents or something like that. Yeah, that's really the easier way that I would do it, okay, at the current exchange rate of 109.22, because you know the yen has depreciated against the US dollar. So having said that, we're now ready to go to the next section. So the good thing about Forex, you know, you can make money if the currency pair goes up, or which is long, and this currency pair goes down, which is short. So long, you basically buy a currency pair. Short, you basically sell a currency pair. So let's say here long, because we're going to do an example afterwards. Let's have this pair called Euro USD, and we're going to and then short is USD JPY. So really, you know, there's really not long and short like shares. It doesn't work like that. So if we long Euro USD and it goes up, this means the Euro is actually going up against the USD. And if it goes down, this means the USD is actually going up against the Euro. You know, if you short, and yeah, this USD is going up against the Euro, that's why you lose money if the currency pair goes down and you're long Euro USD. So same here for USD JPY, right? If you buy USD JPY and it goes up, you know, it goes up like that, that means the USD is going up against the yen. But what if the yen goes up? Well, you short USD JPY and it makes money. It means the JPY or yen is basically appreciating against the US dollar. So not really long and short like the share. We have to borrow the shares and then you have to give it back, okay? Because here you really need to understand this, because you don't understand this, you can be all confused about this long and shorting concept in Forex. It doesn't work like that. So let's do some real examples here so that you truly understand this. And let's go back to the charts. So let's go back to the charts here, but instead of doing GBP USD, the pound against USD, let's do Euro USD, and let's also do something else with USD JPY. So Euro USD. Now let's just say that you buy Euro USD here. Let's just say you're a very smart guy. You go ahead and you basically buy. Okay, you buy or long Euro USD. It goes up. And let's measure some points here now. Let's just say it goes up from this point here. Let's just say you bought here. Okay, you bought here at this point here, which is like what is that really? 1.10286. Let's write it down. 1.10. What is that again? What is that? 28, right? Let's measure that here. It's quite confusing because I lost that. Okay, let's see here. Okay, so that is that's 1.1029. Don't consider the other number. It is 1.1029, and it goes up here. It goes up there. So I'm just going to move this so that I can see. I can see clearer what that price is up here. So let's say it goes to 1.1054. 1.1054. So this is how many pips? This is about that's 5. That's like 35 pips, right? So if you were trading 10,000 currency units, or if you have MT4, Metatrader 4, and that's like 0.1, then you're going to make what, $35, right? You're trading like 100,000 currency units, and you're in Metatrader, and the size of the lot is 1.0, then that's $350 if you if you're buying. Now, what if you were shorting this? You're shorting this, and you shorting this means you're selling Euro USD. You basically expected it to go down here, right? But it went back up. Guess what? This is not going to be $35. You are going to lose $35. And if you're trading like 100,000 currency units, you are going to lose $350. You're just on the wrong side of the trade. Okay, so that's for Euro USD. What if you have another currency pair here, and instead of the Euro USD, let's try yen pair. Okay, I'm always excited by trying the yen pair because newbies in forex take time to get used to the yen pair here. So I'm just going to do that USD JPY. So let's put it in another way. That's USD against JPY, and you think that the yen is going to strengthen against the US dollar. Okay, let's put it that way. Okay, you think that the yen is going to strengthen against the US dollar. Okay, yen is going to go up. So for USD JPY, what you need to do is you need to short this pair, since this is on the other side, or sell this pair. And the yen does indeed fall, but let's just say that, for example, sake here, again, and use this line again. What if you were shorting around there? Which is like 109.11. It falls down, and it goes and falls down here, and get out of the trade around there from the 109.11 to 108.77. Let's calculate that. So you short at 109.11. It goes to 108.77. So again, you just minus this. Again, for the pip calculation, just to make it easy, I don't want to confuse you all and having to calculate all the currency unit. You just take these last two decimal points there. Okay, just make it easy. So 109.11 minus 108.77. That's about 0.34. So that's 34 pips. Again, so you made money here, right? Because you got the direction right. So if this were 10,000 currency units, you'd be making like what? Would you be making $34? No, you'd be making slightly less than that, right? Because you'd be making about 34 pips times 0.83. Yeah, you'd be making like $28, okay? when you divide the US dollar equivalent divided by the Japanese yen, 109.28. So you get around that. And that's how you make money. Of course, if it goes up, you short, then you lose money. That's how it is. So you can go both ways in Forex depending on your direction, whether you think the US dollar is going to strengthen against the Japanese yen, or you think the US dollar is going to weaken against the Japanese yen. So the next thing that you have to mind when you're doing this is actually the broker spreads. Okay, so there's a lot of Forex brokers. We'll go to my preferred broker, especially if you want to try out the signals for the robots. In the next video, there's different spreads, because this is how they make money. I mean, no one will allow you to trade Forex if they don't have a spread, right? They don't make money, because they have to make money because they have to provide you the infrastructure on the cloud and all that, so that you can trade from home. You can trade from anywhere, be a full-time trader, be a part-time trader. That's the magic thing about Forex. But you have to know the spreads on the Forex between the buy and sell of the broker. And each broker has its advantages. I just like to point out to you that the spreads, the money that they make, is quite different. For example, let's see here, Euro USD. This is broker 1 and this is broker 2. So Euro USD here, you see this is the buy and this is the sell. This is the buy and this is the sell. The first thing you notice is that they have different prices for each pair. That's okay, but if you look at the spread here, this is 145.3, 145.7, 145.3, 1.8, right? And here you see this is about 2 pips. So generally speaking, this broker is higher than that. So you're going to make more money here. You need to pay off the 1.8 pips. Now, if you go GBP USD, you see here that this is like what? 1.7 pips, right? 1.7 pips. Difference between 1.2902 and 1.2903.7 here. So 1.7 pips, whereas as you see here, this is about 3.2 pips. So this is the amount of commission that you have to pay the broker. So if you're trading lot sizes of 10,000 or 0.1 on Metatrader, you're paying like $3.2 here, whereas here you only pay $1.7. And of course, the next section where you want to try our signals, we're going to recommend you a broker that has this lower spread here. So just mind this, okay? And also in the next section, we're also going to describe to you this buy stop, sell stop, buy limit, sell limit, because this is how we do the robot. The robot signals in this way, gives us signals in this way. So if you're going to run trades against the robot and see how the robot does its thing, then you're going to have to understand this terminology. So, okay, guys, that's it for now. I'm going to see you in the next section, guys. Okay, bye. See you later. Have a good day, guys.